The United States government is on the brink of a complete shutdown. Lawmakers cannot agree on how to expand the debt ceiling, and so they may just close their doors. Should we be concerned? Will crypto and altcoins completely collapse? Or do we even need to worry? In this video, I'm going to break down what is going on in the US government, what are altcoins likely to do as a result, and when do we see this coming to a conclusion? If that sounds good, like and subscribe down below, and let's find out if we should even be concerned. So as you might be aware, the US government is on the brink of a shutdown. They basically cannot agree on legislation that would allow the debt ceiling to expand. They're basically at the limit. They can't issue any more debt because there's a cap to how much debt they can issue, and they need to pass legislation to do it. Now, that does require Republicans and Democrats to come together and sign off on this bill. However, both parties are saying that they want certain things in there, they don't want certain things in there, whatever. They're doing their political dance, and meanwhile, markets are kind of left hanging out to dry. It is looking, there's less than 2 days, so it is looking like they're going to have a shutdown. That being said, a lot of the movement does happen at the last minute. They'll come down to the last hour, and then they'll have, an agreement. But from what we can tell, it is looking like we are going to have a shutdown. And so I've got Ed Mills here. He's a policy analyst on Washington. He's going to break down what he's seeing coming out of Capitol Hill. Have a listen.
However, we have two sides that don't want to blink. Both sides think that they are to the benefit to shut this down. Republicans think Democrats will be blamed, and Democrats think that the Trump administration and congressional Republicans will be blamed. So we're more likely than not.
So more likely than not to shut down. For the sake of this video, we're going to pretend like we are shutting down, because if we don't shut down, then we carry on as normal. But if we do shut down, there are going to be possible implications for the markets. We're not political people. We don't really care what happens over there. We're just focused on making money. And we want to know that if will a government shutdown affect our ability to make money or not? So let's dive into that. All right, guys. So I scoured the internet to try and find as much data as I could on this. What does the economy do during shutdowns? Let's have a look at your screen. Shutdowns add drama, but historically, stocks don't really care. S&P 500 performance during and after government shutdowns. The longest shutdown that we could see here is about 34 days. The average is about 8 days. And typically, kind of mixed results. In recent history, we have seen the S&P 500 return looking good after the duration of the shutdown. But really, 12 months after, we're looking pretty good, honestly. So, again, when in doubt, zoom out. So, minus 4%, minus 3.5% really seems to be the worst of it. But after it's all said and done, markets still end a lot higher. It doesn't really matter, the political party, Republican or Democrat. We're still looking pretty good at the end of it. And remember, too, if you watched our video the other day, what we said was that after the Fed starts a rate cutting cycle, 12 months after that rate cycle begins, markets on average are about 15% higher. That's 100% of the time. So far, that has yet to not be true. So we're looking pretty good. So not a huge concern there. So let's see the economy more broadly. How does GDP perform? GDP growth during the quarter of the shutdown, not terrible, honestly. We've had three instances where GDP was negatively affected, maybe not even as a result of the shutdown. It's just during the quarter of the shutdown. So it could have been due to any reason, but we're not seeing a historical pattern of there being like this terrible, horrible situation as a result of the shutdown. And so we've got this data to tell us. Let's hear it from some of the experts themselves. I've got David Bahnsen. He's a CIO at the Bahnsen Group. He's going to break down what he thinks is going to happen as a result of shutdowns. Let's have a listen.
Not even a little bit. I've been through this with government shutdown talks so many times I've lost count. It is not a market factor at all, and it hasn't been the last dozen times it's happened.
So it hasn't happened the last 12 times. It really hasn't been an issue for markets. Sounds pretty good to me. How are we looking on volatility? After the government shutdown, not looking terribly volatile. Really, we see volatility go down, actually, as a matter of fact, which kind of makes sense to me, right? Because maybe leading up to the shutdown, we have volatility, and then after the government shutdown, it's almost kind of like a sell the news event. Maybe it's not just, the good news that gets muted, but it could be the bad news. Volatile up into the shutdown. And then we shut down and everyone's like, whatever, we're shut down. That being said, if we're shut down for a very long time, if we're shut down for an extended amount of time, that typically not the best thing to be shut down for months or weeks at a time. That would obviously be bad. I don't think that's ever going to happen. And that would create a lot of uncertainty. And you can see here that stocks do struggle when uncertainty rises. So we don't want to see uncertainty rise as a result. But again, if we know the government's going to shut down, we know that Democrats and Republicans need X, Y, and Z, and they're working towards it. Where's the uncertainty? I feel certain about that. And so there really is, I think, so in regards to just the government shutdown itself, it doesn't seem like it's going to be an issue. The concern now is we are in the middle of a Fed rate cutting cycle. What the Fed is most focused on right now is the labor market, because it's the labor market that's been showing weakness. That is the reason that they would cut. The Bureau of Labor Statistics, if the government shut down, they will also be shut down. And so we won't have that jobs data coming out from the BLS. What does that mean for us? I got Stuart Paul from Bloomberg. He's going to break down the what if. Have a listen.
What's interesting is that in the absence of this federal data, all eyes are going to be on the data sets that we're not getting from the BLS. So the ADP data, for example, carries all the more importance because we're not getting it from the federal government. We're getting it from ADP. If that's the insight that we have into the labor market, if that's the data that's available to the Fed to make their decisions, we're going to need to rely on those alternative data sets. But what does it mean for me from an economic perspective? What do we know about government shutdowns more broadly? Well, for each week that the government is shut down, that typically shaves off about a 1/4 percentage point from the annualized pace of GDP growth during the quarter. So if we're shut down for 4 weeks, that shaves off a full percentage point from fourth quarter growth. There's a rebound effect in the subsequent quarter, typically. What's a little bit tricky is that this is happening right at the beginning of the fourth quarter. So if we were to have a 3-week shutdown, which is about the longest shutdown we've ever seen, we would still have plenty of time in the fourth quarter to make up those losses. And it could just end up being a wash when we finally do get data releases when everybody returns to work.
And so with the longest government shutdown being about 3 weeks, if we match that same shutdown, which that would be kind of the worst case scenario, chances are we'll be okay. Economy won't take a big hit. The data that we've seen tells us that the markets won't be terribly affected. What we're hearing from the experts is that even if we don't get the labor data, there's still other sources we can get it from. The ADP data report is from a private company, so they're not affected by the government shutdown. Ultimately, this seems to be kind of a non-issue. It seems to be kind of just not really that big of a deal. Something that there's going to be a lot of talk about, but something that there probably won't actually be a big consequence towards. So I hope you're feeling better about things after watching this video. I hope you're feeling relaxed. And if there is a government shutdown, you can rest easy. And if there is a little bit of a pullback, if you're in a position to, maybe you can add on those dips, because the recovery of a bounce back, as we've heard, is very strong. Again, this is just more insight and more knowledge to give you the conviction needed to be patient. Remember, the famous quote is that markets are a transfer of wealth from the impatient to the patient. And so in times like these, we want to be patient. We want to wait, and we want to be convicted. And hopefully I've helped you do a good job of being and hopefully I've helped you become more convicted. And if you want to become a more convicted investor in this crypto bull market, like and subscribe down below so you can stay up to date with our macro updates. Leave a comment. Let me know if you've learned anything. Thank you for being here, and we'll see you in the next one.